Hi, everyone, and welcome to Scale Up Your Business. Week in and week out, I'm going to bring you the world's leading experts on business growth and entrepreneurial success. And as I always say, when I bring these amazing guests on the show, you are going to get a heap of value. How important is mindset in business?
You are going to descend to the level of your preparation.
I was so busy today. You were busy doing the wrong stuff.
I will be of service to small business owners till my final breath.
And the question is, can you get your brand everywhere?
Be grateful, be brave, have faith, and show up. And welcome to Scale Up Your Business. Okay, welcome everybody. Here we are for another live show this evening. And I'm delighted to have with me Carey Ransom. He runs the OC4 Venture Studio, and that's all about investing and building high growth software companies. So he's at the very end of very beginning of the journey.
Beginning. That's right.
And I'm sort of the hand pass. I'm the high five at some point along that journey. Isn't that right, Carey? Welcome to the show, man.
Thanks, Nick. Great to be here. And I'll tell you, that intro got me all fired up. So whatever, I'm still ingesting my coffee, but I'm ready to go.
I'm going to say we're different parts of the world. You know what's really funny about it? Every time I watch that video, I look at my COVID hairstyle where I couldn't get a haircut for weeks. And I've got this kind of thing going on. And now I'm all cropped and,
Exactly. Well, I've gone to great lengths to try to keep my hair in some shape during this for sure.
Awesome. Well, listen, everyone who's listening in and enjoying the show, we are doing essentially a live show, but it's going to be a joint podcast. So what that means is obviously this is going to go onto the Scale Up Your Business podcast. And then, Carey, you've got your own podcast. Do you want to introduce that to everybody here as well?
I do, yeah. So I, for over a year now, I've been doing in many cases, at least weekly, if not multiple times a week, a show I call Accelerate Show. And it's really, it's about accelerating knowledge, accelerating businesses. I have typically entrepreneurs, investors, innovators who are accelerating the pace of change because that is changing our world at a faster rate than we're even able to keep up these days. And so I just give people opportunities to share, and you're right there in that. And so I was super excited about the opportunity to introduce you and all of your thoughts and experience with my audience as well. So super excited to do this as a crossover. Yeah,
no, it's awesome. It's one of those serendipitous things, right? So we kind of connected randomly on LinkedIn. I think it was into the sort of random connection note goes out there. And then we sort of thought, hold on, we're kind of really at, we're right in the journey here, aren't we, in terms of the parts we play. And then we connected and decided to do this. And what we thought we'd do today is talk about entrepreneurship for the next decade. So this is going to be quite an interesting topic, but it's also going to be a difficult topic, I think, because obviously we're going through so much change. You just called that out. We're seeing the whole pandemic. Not just that, we're seeing investment changing globally. We're seeing people look at risk and return differently. So we're going to try and predict a few of the trends. And to be really honest with you, Carey, this is not prepared. I haven't written down the 5 key trends.
Yep, not me neither.
We're going to make it up as we go along, from our insight and experience, of course.
That's right.
Awesome. Okay, so let's kick it off. So let's just let's get the audience just understanding a little bit more about your background, Carey, sure. And kind of how that's led to what you do now.
So, I think it's funny you bring up trends. I think I shared this when we met. I grew up in a family business and we were retail merchants. And my family ran a store for 146 years until 2 years ago. And it still runs, but it's not in my family anymore. And so to think about something that can last that long as we sit here today looking forward 150 years is almost impossible for me to even believe to be possible. And I think, we've seen for so long, and part of what really ate away at me when I was a kid was thinking, I don't know if this can go another 100 years. And if I were to get involved in this beyond just sort of growing up in this business, what would it look like 10 years from now, 20 years from now? And as I looked out, and I just had such challenge because I saw a lot of the other retail merchants in my hometown disappearing. They, Walmart and people like that were coming in and displacing that local merchant. And I felt like there were new types of businesses that I needed to probably be a part of. And so very early in my career, I got into the software industry And I started to realize, we didn't have to have money tied up in inventory that was sitting in our back room. And once you built this software, you could distribute it over the internet. And I was in the first software business I was in was in the 90s, and we were convincing people to buy software through a web browser. And this was in the days when people didn't even, in many cases, have a persistent internet connection. They were dialing up.
That's like super early stage, man.
It's super early, right?
That's before Amazon thought they were going to survive.
Yes, exactly. And so, but yet I saw that future and I said, this is incredible. You can create something, and now you almost have the world as internet becomes more proliferated. And obviously I wasn't forecasting that we were all going to have these things in our hands that were persistently connected with unbelievably compute power.
But what did you think back then? I mean, because I know a lot of people who played around with sort of the internet, as we'd call it, which wasn't even really the internet as we know it now. You're right. It was kind of these weird dial-up things that made those beeping noises. I mean, what was the vision then to think that this was going to be something that was so changing? Or were you just taking a leap of faith?
No, I think at that point I just saw like there were needs to automate so many business processes. And, in the case of this first company I was in, you were replacing rote routine work that people were doing day in and day out in a very paper-based manual way. And I just looked across these companies and saw countless examples across the business where people were doing routine work that could be automated. And I said, there are going to be countless business applications like this, and that shouldn't require somebody to have this massive infrastructure of servers and hardware just to automate things. And that's where I saw that the internet could just be so powerful. And so I sort of was hooked at that point. And it was, if you can build it once and sell it as many times as you can, there's a tremendous amount of leverage in that business. And I think that's what got me really excited. And, you fast forward over 20 years and I've still stayed with that. And I think really, as I look at most of my career, it's been about finding that need, that problem that a significant number of people have, and saying, okay, how can we make it better, faster, cheaper for them to accomplish that, or stop having to do the same thing over and over. And I tend to call those things inhuman. Do
you know what occurs to me though, right? You know what occurs to me is like the way you describe that, there's people out there now who still haven't got that.
That's right.
I mean, the number of people I come into who have got businesses that they might have a really good proposition and their go-to-market in terms of their sales and marketing activity is pretty strong, but they haven't leveraged or automated core processes. So therefore, they're not operating efficiently. Some businesses have got really, really good value propositions, but they're not making any money because they're still so focused on high expensive labor-based activity as opposed to a technology.
That's right. Well, and to me, this is now foundational as you think about starting companies. So as I think about the two of us, I'm coming in and looking at the core value proposition and saying, okay, is this compelling? Is this new and disruptive? And can it start to scale over time? And then in many cases, I look at someone like you getting involved and saying, okay, now what are the next sets of levers that we should be thinking about to really scale this? And, I spent some time in that, call it private equity growth world. And historically, that group has been more of a financially driven optimization. How do we change the capitalization structure? Maybe we layer some debt on to have cheaper capital. And I think what you and I both know is that now a lot of those growth levers are not financial, but they are things like system or other types of investments that you can make that,
It's changed massively. And again, just for your audience, just to kind of, I'll do a very quick kind of intro. So, I mean, I did around about 10 years in private equity. And actually my first, I suppose, introduction to private equity was with a company called Getty Images, which it's a bit of a case study in how you do successful scale up. I think it was 5 exits from IPO back to private equity to private sale back to private equity. So the mastermind behind that, a guy called Jonathan Klein, he effectively sold the same company 5 times. Brilliant. And walked away with hundreds of millions of dollars. But I spent years doing that. But I wasn't the financial guy. To your point, I was the guy who was looking at all the other dynamics and characteristics. And you're 100% correct in saying that private equity, when I first got into it, was about financial gearing, financial leverage, how you could look at cost of capital differently, those sort of things. And then something started to change about 5 years ago, is that I think it was partly because there was a different generational workforce coming through. There were different opportunities around technology, more competition, more globalization.
To me, competition and sort of the availability of money broadly has driven, you have to create more value.
Yeah, well, there's just too many choices, right? In terms of those things, there's more investors because there's more access to capital, and there's more entrepreneurs. And I forget the current figure, but someone said it's like 400 new startups a week in San Francisco alone, or sort of that part of the US. So anyway, what happened, and this is the transition, is I was effectively the sort of turnaround guy. So I was going into investments that weren't going well, partly because, the financial thing wasn't the only thing that needed to be looked at. And then I would start to look at the kind of what you would sometimes call a little bit softer areas, but powerful areas. So purpose and vision, people. We'd look at process. We'd look at predictability of revenue. We'd look at value propositions. And it wasn't so much about the individual components of the Carey. It was actually about how those things work like a well-oiled machine. And that's where private equity is now, is that most of the progressive firms, most of the successful firms have that operating and strategic layer in their investment thesis as much as they do the financial side.
So just to ask a question there, because I agree with you, I spent some time, as I said, in the more traditional PE firm. Even I've stayed friends with them. They've even had to become much more innovative in how they think about where the value can be created over time. How do you think about true innovation, true startup inside a private equity owned or controlled company today?
Yeah, I mean, what I have seen, and again, it's not one of those sort of ubiquitous things where everyone's doing the same thing, but a lot of the more, again, progressive private equity firms are moving into what would be the traditional VC world. So they're making speculative bets on businesses that are pre-profit, which is usually uncommon, because it's normally obviously a profit-based multiples as opposed to revenue or anything like that. So I'm starting to see that, and I'm starting to see private equity firms actually sponsor venture incubators, which is interesting in its own right, so that they can get first tabs on anything that looks like it's interesting coming through that hopper. So for me, the world of partnerships, and actually we can talk about this in trends later, but partnerships and collaborations, joint ventures, I'm seeing much more of that going on. The contradiction to that is this, though. I'm also seeing private equity being very, how do I call this? Discerning is probably the best word about all these different startups. Because there's so many things. I'll tell you a very quick story because it's funny. I was in New York about 18 months ago, and I was looking to buy a HR tech business to bolt on to another suite of businesses in a PE-backed group.
Sure.
And I sat there looking for a very specific type of HR tech business, and I had 6 businesses pitching to me. And I kid you not, the only difference that I could see from the pitch, and again, the very limited due diligence I had, was that the first guy who presented was the 3rd employee of Facebook. And even he didn't tell me that. Someone had to tell me that afterwards, but that was the only thing. If someone said, which one are you going to invest in, Nick? I'm kind of going, well, maybe the Facebook one. Because they all look the bloody same. And there is a little bit of that risk, I think, at the sort of innovation / early stage startup environment at the moment. Certainly what I'm seeing.
Sure. Yeah. I mean, I think that's, if you really look at what's happened, and, this has led to why we've even ended up starting what we started with the Venture Studio. But if you look at what's happened in many respects, I would say venture capital has largely gone the path of private equity. And what I mean is, the private equity firms have just continued to scale in size, assets under management, bigger deals, and this collecting assets has been a big part of the job. And frankly, when you're managing billions and billions of dollars, you can get pretty wealthy just managing that from a management fee standpoint. And I think that's what much of venture capital has done, and they've justified it by saying, well, it's easier than ever to start companies. There are going to be many that look the same at the early stages. Let's see which ones actually start to emerge, and then we'll drown them in capital to give them an advantage by being best funded, so they can be more aggressive in building out their go-to-market and building out their marketing, in really investing ahead of their profitability. Will it really equip them? I call it, money as a strategic advantage.
Mm-hmm.
And I think that's the first time in my lifetime that I've seen this really happening in the venture world. And so what that's ended up doing is creating this environment at the early stages where founders in many cases are banging their heads against the wall trying to figure out, like, how do I stand out? If I've been the first employee at Facebook, that gives me some pretty significant advantage. But if I have domain expertise, or I have a really compelling idea, I'm going to have to scrape, and I'm going to have to get a lot farther along on very little and it almost then becomes lucky at times to emerge in a more competitive environment. And so a big part of what we started to look at there is we said, okay, what are the early levers that can create advantage? And what we ended up landing on was this idea that talent and experience can be a real strategic value in those early stages, that it's very difficult to recruit early stage talent that's capable. You may have
what you're saying there is if I did happen to have the third employee of Facebook in my team, I should be telling that story.
Oh, for sure.
Stand out. I mean,
because people will give you credit, even if you shouldn't get credit for that.
I know.
People will give you credit, right?
I know. Well, it's still the world, as much as I hate to dumb it down too much, but the world of kind of, picking investments is still a little bit like Shark Tank and Dragon's Den over here. If the person's investable or the team's investable, then that's one of the risk things.
Sure. That's been our whole MO, is to say, look, if I can give you better people at the earlier stages of your business than you're likely to be able to afford or know, then that has the potential to create much better early outcomes for you. It's that whole idea.
And also the difference between success and failure.
For sure. It's a risk management.
That's right. What are the dynamics? I mean, so let's go back one step, because I'm just curious about how you do this. So what are the he said beforehand about there's more pressure or more competition for these businesses to kind of get ahead and stand out and step up. When you're validating these businesses, what are you looking for to make that decision as the VC, as the person who's going to put some capital in? What are those characteristics?
So from the founder or founding team standpoint, we're looking for a compelling founding team, and that doesn't always look the same, but compelling could be they have a really unique perspective. They have an insight into why they're doing this. And it could be that they come from that world, that they've been in it. They've seen something that others just haven't seen. It could be that they have some sort of breakthrough technology that they've developed as a technical founder. But it could be a business founder or a technical founder from our perspective, but they have something compelling about them. Then really, for a big part for us is commitment, that they have decided they have to do this. They're just at this place where this is calling them. The fire's burning. They have to go pursue this because they feel compelled that this is just the world that they need to be, and the world needs to have them in it doing this, right? So there's that commitment that we really want, that's going to carry them through, because invariably they're going to run into challenges. So we want that. And then for us, the other big ones are that they're coachable and collaborative, because our attitude is that if they feel like they have to make every decision, that they have all the answers. There are a few of those people in the world, but that's the rare exception. And that, generally speaking, building great companies is a team sport. And so if they're going to be open to coaching, open to collaboration with us in the early stages, to me, that sets a tone for the kind of company they're likely to build, that's going to make it a more attractive company to really good talent who can feel like, if I come in here, I'm going to have a voice, I'm going to have a seat at the table, I can do good work. And so we really look and heavily index for those coachable, collaborative founders, because you need to really get the most out of everybody around the table that you can. And it's rare that that one person is going to have all the answers, and they're going to have a better chance at finding the best answers by really facilitating a much more collaborative environment. And so those are kind of the keys out of the gate for us. And then we start to look at the market and try to understand what the dynamics of change and disruption and competitiveness in this particular market space that we see, and is there a place? Is this dominant and it's going to be very difficult to enter, or is there a change underway that allows some new entrants to come in and really make waves?
Are you looking for proof of that at this stage? Do they have to have some sort of MVP which has some sort of customer validation?
So we don't require that.
Okay.
We may, as part of our diligence, start to do some of that ourselves. I mean, one of the things that I really bring as a key part of my value is just the fact I've worked in so many different industries, in so many different types of businesses with different business models, that I use a lot of that experience to help me with my process in looking at this at a much more abstract level. So if there are things like regulatory or other factors at play, I can look and see, okay, is that going to be a big impediment, or is that potentially an enabler to change? One of the best businesses I've ever been a part of was one where a regulatory change drove massive demand, and all we had to do was just provide the product that allowed the customers to check a couple boxes to make sure they were continuing to be able to operate. And so actually the go-to-market was maybe the easiest I've ever seen, because we just said, hey, this keeps you out of trouble. It helps you comply. We're good guys. Sign up here and you're on your way. And so it was just like fish in a barrel. And so sometimes that may be looked at on the surface as an impediment, but could actually be a really interesting value enabler, right? So I think it's all that experience. And then often I'll do some of my own independent research by calling other people to just get their perspective. Because as you know, with founders, when they're committed and they're convicted, they're going to have a good sales story as to why they're going to go do this, how they're going to win. And I often say their pitch deck is them at their very best. I want to get into the reality of the situation and find out, okay, what's this really going to take?
Yeah. And what I find when you get the handoff to kind of my part of the world,
yes.
What I see a lot of, and this is kind of one of the potential watchouts and or failures, is that the problem that existed when the business was started by the founder, and the solution was also valid at that point,
yes,
is no longer relevant or valid. And we'll talk about that in a trend in a second, because I think it's probably the first trend I'll kick off with this evening. But then you find that the founder gets blinkered because they're so in love with the thing that happens, when they begin the business, that it's no longer, as I said, successful going forward.
That's right. Well, that's why you see that seasonal, right? I call it seasonal, that, we all, as we're involved, and I've been fortunate to go through many, many different seasons of business and business change. And I have this weird willingness to sort of look at myself and my role and the business and really do that evaluation. And I find that a lot of people, especially when they start to wrap their identity up in that business, it's hard to be objective about that, right? That idea.
That's a key word.
If we were going, I'm sure you've had this conversation before where you've said, if we were going to go out and recruit a CEO for this business today at this stage, would you be in our candidate list?
And well, I'm having that conversation with someone right now, actually. Sure. And, and I use the example that just because you guys had the firepower, the ignition to start the business, the idea, doesn't mean that you're going to be the best to take it forward to the next level. And that's it actually happens to be one of my definitions of scale up, is that a person who is brilliant at starting a business is not necessarily the person who can take it to the next level or to an exit, because it takes a very different mindset and skill set of experiences. And to your point, great word, a different identity.
And I think a willingness, for that person who wants to learn those new skills or adapt, it can be possible, but you have to be much more intentional about it. And I think we as I've tried to do some of that while I've been in businesses. So most of my career has been on the operating side, on the inside in various roles, and I've sort of had every job. And I feel like that's part of what gives me the ability to be pretty objective and say, I may be able to, you need somebody to start the marketing function. Okay, I'll start it. But once it gets to a place where it needs to really be managed and optimized, I'm going to probably opt to go find somebody who enjoys that and is probably far better at that than I am. And so I'll go find my own replacement. And if that means it's time for me to move on out of the company, okay. If there's another role that I can go take on, but I think that to me, it's just always been trying to lead by example. And I think sometimes that works. Sometimes it doesn't matter. They're going to hold on regardless.
It's a rare. I mean, in my experience, I'm sure you've got a similar view. It's a rare leader, a founder, probably the best way to say it. The very rare founder who can feel comfortable with that. You know what I mean? Particularly some of the ones who have kind of been thinking about this business for ages. They've been growing. They're not like a quick startup. They might be 2 or 3 years in, and they still want the thing to start to show some signs of growth. Admitting at that point in time that they're not necessarily the right person at the leadership part of the business, or conversely giving up that role, because a lot of these people have quite high control needs as well,
for sure.
But that's what also makes them great at the beginning, because they're so, if you take the prototypical Jobs type of thing, Steve Jobs, there's an obsessiveness there, with the particulars, the standards, you know what I mean? Elon Musk is similar.
Yes.
A lot of people, I've never met him, but a lot of people say he's quite difficult to work with because his standards.
Surprising, yes.
Yeah, exactly. But it's interesting. Well, let's talk about some trends. As I said, we'll riff a bit here. We'll make this up as we go along. First one that occurs to me is, and we've talked a little bit about it, is pace of change. So rear view mirror, forward-looking. I think things are just accelerating to a level of pace that it's very hard for entrepreneurs, investors, just us as consumers in the world to keep up with.
That's right. Yeah, I totally agree. It's the research that I've seen shows that the pace of change and our human adaptability to that pace really converged within the last, you can't pinpoint a specific time, but within the last 5 to 10 years is really when that eclipsed. And so you think about human history for, centuries, millennia, we were able to always stay ahead and adapt. And now this pace has gone beyond our ability. And so as I think about how that plays out, it's actually pretty scary in some respects, because you have to think about, like, how do we bring everybody along? And whether that's just, you look at it, how does it manifest itself in just the day-to-day of, these bigger companies are coming in scaling more rapidly than we've ever imagined. We have, multiple $1 trillion market cap companies. We've never seen that before. And then I think we'll see companies of giant size fall more rapidly than we've ever seen before as well. And so all those things are causing disruption, but also causing new opportunities to emerge. And so how do we equip people with the skills? How do we bring them together rapidly and spin them up on the things that they need to do, and then let them move on to the next thing? And so I think the idea of how corporations exist, what the structures and the processes of how people work together within them is almost unrecognizable to you and I as we think about it today and what we've seen as we look forward, right? And so I think the imagination that we have as humans is the only thing that will hold us back, but it's pretty fascinating to think about.
Yeah, and I think that the thing that's interesting to me around that is, again, if pace is quickening, then speed to market and all those things becomes, critical. Whereas people used to work on annual plans, I now advise 90-day plans, and then, literally a week matters in a 90-day plan, whereas missing a couple of weeks in a year plan, you can probably use that as a bit of an excuse. Oh, well, we've got plenty of time. But the thing that really I'm interested in seeing is how us as humans evolve. Because you're starting to see, you've got the whole mental health thing going on. You've got the fact that, 2007 was when the iPhone was properly launched. So the birth of the app. And again, those pictures of everyone just staring at their phones all the time, And so I'm curious about how that's going to, if things get quicker and quicker and quicker, we're plugged in even more, what's that going to do to us as humans? How are we going to adapt? That's the thing for me, Just to finish it, Elon Musk said something on the Joe Rogan podcast. I'm not sure if you saw it, but he said we are already cybernetic organisms.
Yes,
we are infinitely, with our smartphone, we are infinitely more intelligent. We can answer any problem in the world. So we're already there. And it's quite an interesting way of putting it.
Yeah, I'll admit, I have somewhat schizophrenia. And partly because even you mentioned this earlier, I go, in some respects, like I've been at this for a long time, and yet there's still plenty of people doing okay that aren't digitally native, that aren't really thinking about this, and are still, much more in this sort of singular, almost I'd call it like physical manual world. And I look at, a lot of those things and say, it's not that we need to completely eliminate that, but that we have so much human creativity and potential that can be unlocked if we're not distracted or doing lower order activities. Yeah. And so I think there's just so much, and we're seeing early signs of that. When you think about some of these crowdsourcing platforms where you can crowdsource knowledge or creativity, I look at those things and say, this is really fascinating because it's early days, and how we can go identify the people who are best to do these very specific things and then bring them together from all over the world is pretty exciting to think about what that can create when you pull all that human potential and creativity together.
Yeah, and that's definitely the opportunity. I was reading an article the other day about the difference between functional versus vital. And it was an interesting article. It basically said that, the functional tasks, the things that can be automated, that's where the world is going to go. Natural selection, if you want to call it, will take us there. But vital tasks, the things that we would call characteristics of the human spirit, the emotional side, even though there's attempts with AI to try and crop that, no one's really cracked that yet. Not to the level that the human brain, the human emotion can drive. So for me, it's interesting to see how that evolves to some extent as an industry in its own right, and the connection of those points, as opposed to it just being in terms of the jobs that are there. Yeah. All right. So here's another one. And then you can throw a couple in. I've only got two, so that's it. The other one is this idea of collaboration and partnership. This comes a little bit from my sort of last few years when I was working very directly with the PE firms. I still work with them now, but I was working in them. And it comes back to the concept of a roll-up. So for everyone listening who don't know what that is, private equity will normally buy a portfolio company. So they'll invest in a space and they'll choose usually something that's got profit, it's got stability, it's got some really good kind of intangibles of sustainability as well. And then they'll bolt together a number of companies to create a group. So they get disproportionate value, but disproportionate scale, and therefore what is perceived as lower risk, et cetera, et cetera. My view going forward is you're going to get a divergence of those things. So you're going to get micro niche, small, but really focused and very agile. And then you're going to get these massive groups. And the middle, will get squeezed a bit. So it's a little bit like you can't just sit in the middle anymore. You've got to make a choice.
That's right.
And that's a bit of a different dynamic, I think, than what we've seen if we look backwards. What do you think about that?
I totally agree. I've got a friend, and we talk about this idea of kind of the modern day company town to some extent, and what does that look like? And if you have the really large group, they're going to have a hurdle rate at which they're not going to lift their finger as they get larger until something is of sufficient size or potential. And so if you think about that naturally is going to stifle innovation. And so how do you connect these two poles? One option is to just equip a whole group in a community and say, look, you work on these really front end ideas and innovation, and we'll be the place where you can bring it to both vet it and commercialize it. And so you have people over here working in these very micro niche ways, but then they bring things over when it's time to really scale it up. And I think that can serve both of those groups equally. And that may be the way that we start to see more of that happening. And so to your point on collaboration and partnership, it's the big company being much more transparent and open about things that they think they may need, and then equipping people with that knowledge to be able to think about it and work on that. And I think that's where there's often been a separation. I see that in my own community, where many of the startups that we work with, where there are bigger companies around here that should be logical early customers, they just don't think that way as early adopters. And so in many cases, these startups have to go to other markets to find early adopter enterprise customers, which is wildly inefficient. And so I think what that should hopefully do is create some of these centers of knowledge, because I think a lot of the research is showing that when you get a cluster of talent around an industry in a geographic area, that's probably the hardest thing to move. That people will plant, and that knowledge will plant, and that companies will set up around that. And you really do start to create these knowledge clusters and capability clusters. So I think you're just going to see people continue to invest in those to really establish those centers. And that then just becomes a structural thing of how do they work together more effectively.
Yeah, no, interesting. I did have another one, but I'll let you jump in now.
Yeah, so, you mentioned, 400 startups a day in, San Francisco. We have had actually a somewhat epidemic issue in the US over the last 10 years, in that the number of new startups, new entrepreneurial endeavors are down about 1 million from the prior 10 years. So about 100,000 a year fewer, which is surprising given that the narrative out there, I mean, I'm in probably my own echo chamber of all this news around startups, but people aren't starting companies at the rate that they were. What do you think has to happen? Do you think that continues? Do you think there's a change to that as a trend?
Yeah, I've got one of the things that I think was happening before we reached the pandemic, or had the pandemic, or we're still living the pandemic, whatever you want to call it. It's becoming just a thing now. Is that the world of work was changing anyway. And there were a lot of studies done by the big consultancy firms. Deloitte did Workforce 2020, and talked about half of your workforce in the future won't be employed by you, et cetera, et cetera. So what I think, and this will answer the question, what I think I am seeing is that there'll be more businesses that are launched. And again, in the UK, we typify that by registered on Companies House. But they'll be mainly solopreneurs.
Sure.
There's lots of coaches now because, what do they say? Coaching's the new word for the unemployed, and all these terrible things. And you've got all these kind of consultants, coaches, advisors coming out the place. So what I think will happen is I think a lot of entrepreneurs will be born through necessity, because they lost their jobs through what has been a massive change in the way that the companies will think about work. And we've got industry changes, and we can talk about sectors a little bit later on. So I personally think that we'll see a growth in the number of new companies formed. Mm-hmm. But in terms of, let's talk about just what I call purist entrepreneurship.
Sure.
The kind of thing. I think there's also going to be, there's less, of a romantic ideal around it than there was, say, 5-10 years ago. Mm-hmm. So, there was a little bit about I saw an article where kids in school were asked what they wanted to be when they grew up, and they wanted to become entrepreneurs because, there was a lot of kind of publicity around that. And I do think that people are starting to see that that's quite a difficult route these days. Mm-hmm. And therefore, I think it's going to be one of those things where you'll start to see some of the innovation stifled. Now, that's just a personal view. And I think from my world of kind of getting people kind of knocking on the door asking for investment, which they do for me as much as they do for you, it's probably slightly different conversation, is I'm seeing, this is going to sound really bad, I'm seeing less good ideas recently than I saw a few years back.
Mm-hmm.
And that's partly from what I said at the outset of this conversation, is that a lot of people are just doing the same stuff. So it's a bit of a hedged answer. I get it. But I think the dynamics of entrepreneurship are changing, and that's not going to go backwards for some time, or change for some time.
Yeah, it's a really interesting topic. And then the other trend that I was going to be, sort of on the same lines to ask you about is around investment, because you wonder if, in some respects, is the difficulty to access investment at those early stages because funds have moved up, more money has been concentrated in fewer hands. So you're seeing fewer deals get funded, but the ones that are getting funded at a much higher level.
Yeah, it supports what you said, Carey. It supports what you said. I mean, to give you a bit of a perspective on this of what I've seen, you're 100% right that there has been a pushback by, I'm going to say, investors that are putting their money into the funds.
Mm-hmm.
So the institutional investors, to very lazy fund management.
Mm-hmm.
So you're right. I mean, I've seen some PE firms, go and try and raise a second or third fund or whatever their cycle is on when they haven't even deployed their first fund.
That's right.
And you're right. It's because the management fees are compelling.
Right.
If you're taking, 2%, or thereabouts of a 200 million pot, you're sitting quite comfortably if you're there with a few kind of principal managers of that private equity firm.
Okay.
So I'm seeing that happen. So therefore, the byproduct of that is that if the main institutional investors are now holding these firms much more to account than they did beforehand, those private equity firms are being a little bit more diligent in terms of where they invest.
Mm-hmm.
So the idea, and I think this then rolls down to the private equity side too. So the idea of, hey, listen, we're just going to put a few 35 bets on whatever turns in the door this week. There's more rigor around getting funding.
Mm-hmm.
And I think I can't see that changing, even though there's a lot of capital out there and people want to deploy behind good things. I think that it's a little bit more, people are being more prudent in terms of what they invest in.
Mm-hmm. So the last one I'd love to sort of along those lines is, how do you think about this idea of, you have this globalization trend that we've seen over the last, certainly last couple decades in a really significant, meaningful way because of technology being able to really shrink the world. But how do you think about this idea of almost like microeconomics of, if I want to really make meaningful impact in the place where I live or the part of the world that I really want to positively affect change in, shouldn't I be investing some amount of my dollars into that directly to know? Because if you look at where a lot of the money centers are, it is London, it's New York, it's San Francisco, depending on the type of asset class. And then in many respects, those dollars get invested locally, but in many cases they're not. They're getting invested globally. And so you have these intermediaries, as opposed to saying, I really want to have impact in this area. And, whether that is a particular country or a particular region. And so do you see this sort of return to localization at all in your mind?
Yeah, there's two parts. There's two things I'm seeing, and they come. My thoughts on this come from some recent conversations, actually. So I had a guy called Brad Feld on my podcast recently. Brad. So for people who don't know who Brad is,
right now, yes.
Sorry, he's what?
I have his book on my desk as we speak.
Wow. So okay. So for those who don't know who Brad Feld is, all the listeners out there, one of the first investors in Fitbit, and got lucky again and invested in Guitar Hero. Anyone who remembers that fantastic PS4 game. And each of those exits were for his firm in the billions. And he said to me, he said exactly what you said, actually. He said he's based in Boulder, Colorado, and his firm in particular looks for global players, so good investments, but also a fair chunk of his investments are about supporting local business and local ideas and local innovation. And I've heard that from Brad, but I've also heard it here in the UK and in others. And it's coming from two areas. It's coming from the investors themselves. who are seeing that, you can't just operate in these mega centers anymore. And to be frank, are these mega centers actually going to exist in the same way? Because, people don't need to go to work in New York anymore to have global remit, or have, you don't have to turn up to the high-rise office. You can do it from your home with Zoom. So everything's going to change around that. But this is the other thing that I was going to throw into the mix, which is aligned to your trend, but also I think supports it, is I'm starting to see entrepreneurship, certainly scale entrepreneurship, as a force for good. Mm-hmm. So you're starting to see the bigger companies getting, whether it's, this is going to sound a little bit funny, whether it's they genuinely believe this, or whether they're getting pressure from communities and geographies to do it, they're starting to invest back into the communities themselves. Now, Facebook did it the other day, very clumsily. I don't know if you saw this. They've done a grant for small business, and they've basically said 30,000 businesses that have been affected by COVID globally are going to get grant funding from Facebook. Right? Sounds great, doesn't it? Sounds a little bit CSR. But here's the catch. You have to be in a major city where a Facebook office is. So in the UK, you had to be in London. Now, of course, in the UK, there's lots of other cities. So it was a bit of a mistake. So my view, to sort of summarize that, is I think there's going to be investment more locally because of all the reasons we're seeing dynamic change. Well, I think we're going to see more investment coming in a kind of socio-economic way, force for good, than we've seen before. And I think that's going to change the role that the businesses have versus maybe the power that governments have had previously. Because, let's face it, the big businesses in the world right now, the Amazons, the Facebooks, the Apples, they have more power than a lot of governments.
Way more.
Yeah. And so
I think that's the other, I don't know that we have time to explore it, but I think that's the other question is, what do we do with that? Do we do what we've historically done? If you look back across many cycles, there's been a point at which that view is, this is monopolistic. We need to intervene and break them up, or make them a little smaller. Or do they truly assert themselves as a more global force for good, where there is a compromise or some acceptance that they can have that for a sustained period of time? And I think it's unclear at this point.
It's massively unclear. I can tell you which side of the fence I firmly sit on, right? And I'm one of enablement. So I'm very much that force for good, in terms of the business leaders who have built those companies to that level. And it's not just the huge ones we've named. There are a lot of other big companies out there now. I think the role of a leader these days has to have that more 360 perspective. Now, where it fell down, or where it has fallen down, is government has traditionally come in and tried to enforce too much stringentness on this. And I suppose the classic example of what we're talking about is the show Billions. You've got Bobby Axelrod and whatever else. But my personal view is that the shape of government has going to have to change to support the growth that entrepreneurship has had. So therefore, my view is that in government, you're going to have more people who have come from the world of business to be able to have the language with some of these behemoths. Because if the dialogue isn't collaborative in those ways, then it has the risk of becoming a major issue of just fighting and conflict.
Yeah, I think it's a fascinating topic for sure. And I mean, as somebody who grew up in a small business family, and we saw these big box retailers come in and around and really start to dominate what was otherwise historically an independent small business landscape, there was a lot of conflict, because on one hand, it was sort of this appreciation of how efficient and effective they were as operators. And on the other hand, you saw the flow of money through these communities radically change, where it wasn't recycling within a community. It was getting just sort of siphoned out to shareholders that were typically absent and somewhere else. And so I think, having to think about the multiple constituents that are involved in an economy and in a business is, to your point, is today's leaders' responsibility. And for the last few decades, it has not been.
No. There's one big change, though, because there's one big change, Carey, which I think means the dynamic is changing. And that's the visibility.
Yes.
The fact now that everything that anyone does, you, me, small business, big business, is visible to everyone else in the world. That even if you have leaders there who may still sit in the Bobby Axelrod view of the world, they're not going to be allowed to do it because the customers now have a voice.
That's right.
So the change. Why don't we? And this has been fascinating. We've done heaps tonight. This is great.
I knew we would have an easy time. I knew we would have an easy time.
No, it was great. But let's finish off. Let's finish off with one last bit, I think, to help people. So, if you were going to start a company now, right, thinking about the next decade and thinking about particularly the challenges we have in the environment right now, what type of company and what industry sector would you be putting your money behind and your time behind?
Sure. So I continue to believe that there just is countless opportunity all over the place. I do agree that many of the things that we see and you sort of spoke to are obvious, are pretty easy to start, are probably not wildly scalable or innovative. They're incremental. And so I think we see a lot of incremental activity. I think some of it is still worth starting with because it may be a jumping off point. But I want people, even if that's an easy way to get into business, I want people with a bigger vision, with a bigger view of the change happening. So whether that's in something like, in the US, obviously you look at something like healthcare and you say, that is an area just ripe for so much disruption. It has been really hard to disrupt. One of the things that COVID has done is really imposed a lot of future now disruption on it. And so this may be now the time to really start to think about it, but you may have to start with incremental to ultimately do something wildly innovative. And so I think some of it's that you've got to be somewhat realistic about how you start. But I want, that's why I love these like really visionary, committed entrepreneurs, because we want to get behind them, help them start to get successful so they can think bigger. And it may be they think bigger for their next one, because funding continues to be a challenge at those early stages because of all the things that we've talked about. And so I think there's some of that recognition. And so we've got to figure out how to encourage some of this more radical R&D, next generation materials or things that are much more environmentally neutral to positive. And a lot of that's going to require much more capital, much more R&D. And those continue to be challenging from my perspective in how we do that, because the governments don't, in many cases, have the stomach for it. And a lot of risk capital doesn't even have the stomach for it right now. So I'd love your perspective on it too.
Yeah, I still I've always been relatively gifted at the 50,000 foot view, right? I'm probably better there than I am in the detail. So I sort of look at where not the kind of tactical things that we're seeing now, like let's go and do online retail because everyone's buying from that. I look at more systemic change. So for me, there's 3 or 4 sectors that I really love. The first one is future of work. I know it's inverted commas, but I just think we haven't cracked the surface yet of what that really means.
Sure.
So we've talked about knowledge economy, but I think the idea about what does great typical traditional HR become. One of my colleagues talks about putting the human back into HR, and I love that space
for sure.
And I think there's going to be a lot of change there.
Well, and recognizing that, I mean, for a lot of people, for example, this work from home virtual environment is actually for a lot of people wildly unhealthy.
Yes. Oh, yeah, exactly.
Right. And like that may be the future of work for a big number of jobs for a while. But how do we measure that with human needs?
Yes, exactly right. So aligned with that is education. So a lot of the private equity businesses that I was personally involved in, the ones that I was like chief exec of and whatever else, were education. And I still think there's some fundamental flaws in education overall. The big one for me, which is an obvious one, but it's still great to me, is is the thing that proper financial management and entrepreneurship and some of those really important skills are not taught in schools. So that needs to be disrupted massively. And then the sort of third area for me personally is similar to what you said, actually, Carey. It's more in the preventative health space, because I still see whether it sort of draws on topics of nutrition, sleep. People these days, because of the pressure that we're seeing, the amount of change, the human body is not great with stress anyway. Do you know what I mean? And I think there's going to be a massive epidemic, if that's the word, around both mental and physical overwhelm.
Yes.
And I think there needs to be more done in that space. So anyone who's coming up with technologies around preventative measurements, the analytics around that, habitual stuff, I like looking at businesses like that.
Yes, I would totally agree. And it's been difficult. We've looked at so many of those, particularly well-being, mental health related ones, that it's hard. They're very easy. If it's an app, as an example, they're very easy to start. And so you end up seeing a huge number of them. And it's really trying to make that evaluation of, why is this one going to find a resonant audience and a model that adds way more value than it extracts, and gives it some ability to have some sustainability to it, right? Like that. Those are really hard to figure out.
Yeah, my podcast, the episode that actually came out, I think it was this morning actually, on Scale Up Your Business, was discipline. And what I talk about that is that we all kind of, to your point, we all kind of know what we should be doing, right? But we give up too easily, and that's partly because we don't see the benefit straight away. It's delayed gratification. Right. And I think there's something around that.
Health is a big reason why that's been such a difficult topic.
Yeah. No, indeed. Well, listen, I think we're at time. That was an awesome conversation, Carey, as we thought it might be.
Really glad we could do it. And this could be probably a weekly one for that.
Well, the handoff between what you do and the area that I play in is interesting. But, again, the intersection, we should probably do something else on the intersection. So what happens at the join point? That's obviously another conversation to have at some point. But I think people would love to know at what point people change. I mean, it's not like it's a one day you change from startup to scale up, but it's like there is a merge, there's a dynamic. It'd be interesting to sort of see those characteristics. So let's do this again at some point.
That'd be great.
All right. Thanks everybody for joining us on Scale Up Your Business today, our live stream. And as I said, this will be coming out on a future episode of Scale Up Your Business and on your podcast as well, Carey.
Yes, I will release it on Accelerate Show sometime very soon. So look for Nick and I's conversation there. And thanks for joining me today.
Okay. Thank you, everybody.